Welcome back to another video of Charts with Cart. Now, you have come to the right place if you love the charts and you hate the narratives, the news, and the BS they try to feed you. We only discuss the charts here. Now, without further ado, I'm not a financial advisor. I don't give financial advice and never risk more than you can afford to lose when you trade. In today's video, we're going to jump into the SPY and the QQQ charts. I'm going to tell you why I am long the QQQ because I'm expecting a bounce there, and we're on the SPY right now. I'm expecting a 2 to 2.5% bounce on the SPY right now. We're trading at 549, and I think this 2 to 2.5% bounce is going to start tomorrow, Monday, and we're going to see it this week, potentially the start of this week. All right, so zooming in, what do we see here? This crash here, okay, maybe crash is a little excessive, but this recent selling here was totally foreshadowed by the RSI. So we saw this bearish pattern here forming on the RSI, which gave us a little bit of foreshadowing that, hey, once this pattern was going to collapse, that price would likely collapse with it. Now we have come to an area of support on this chart. This is the channel bottom here. I'm expecting a bounce here, and where could we bounce to? Potentially this gap right here. So see how there's this gap right here? So we're at 549 right now. This gap, potentially we could fill it and head to 563. That's my guess to where we could head. But now, here's the kicker. If we come back down to this level here, which is highly possible, then it's not likely we're going to hold it. Why? Because when you see a bounce off a level and you come back to it again, that technical level has already technically been used. Now, it's still support. It's definitely going to still be support, but the more time something slams into the brick wall, the more the brick wall is going to start to weaken. And normally when you have two consecutive hits back to back, that is not a good sign. That's not what you want to see. So if we headed up off this level and then came back to it in 3 months, it would be a lot more safe of a level to see a bounce than if we come back next week. So what I think is going to happen is that we're going to see a little bounce this week, potentially head back to this level next week. And if we are back at this level, I'd expect it to break. And where would I target on a pullback? Right here, this level here at around 523, 524. That's where I'm targeting for a bigger pullback on the SPY. All right, so we're on the weekly chart of the SPY right now, and you can see our momentum at the bottom of the screen right here looks to be flirting with a curve down. And look at our weekly RSI. We have double topped and made considerably higher highs in price. That's not what you want to be seeing with these indicators down here. So essentially, what you see at the bottom of the screen is that our momentum is running thin and that our strength, well, we're not as strong as we should be. So we are higher in price than we were here. We should be stronger, but that's not what we're seeing with the RSI right now. We are technically forming divergence, which is a sign that we are not as strong as it seems. Now, this could take a long time to play out. This is not something that you see overnight take effect and we have a big crash. No, this is telling you that eventually the market is going to factor this in and it's going to come, but it will be down the road. So what do we see more locally here? More locally, we do see a reversal candle on the weekly chart. This is not a good sign. We saw this reversal engulfing here. We had a few weeks of downside. We saw a reversal candle here, many weeks of downside. Technically, we saw a reversal candle here. What happened the next week? We bullishly engulfed that candle. We nullified the bearishness right here. So essentially, we have to watch what happens this week. If we bullishly engulf this candle and we close above the 565 level on the SPY, we can be bullish on this chart. But if we don't see that, we have to remember that price action is telling us to be bearish at this level. Because, hey, this is a bearish engulfing, momentum thinning out, and strength, we're not getting stronger. And if you're not getting stronger, you're getting weaker. Now, what about the wave count here? As you know, I like to use Elliott wave in my bigger picture to add some context. I don't like to use it at a very minute level because I just think it's BS at that point. I do think it has a little merit, but you have to make sure you're using it to add context and not just using Elliott Wave to fulfill your own biases. So, essentially, I have us topping in a third wave right now. So, in a third wave, and what would that mean? That we experience a pullback and then have another fifth wave, and that will be the end of this cycle. So if we are starting a fourth wave now, where could we potentially bottom? So if we retraced 0.236% of this wave 3, that would take us to 521. And if we retraced 38.2% of this third wave, that would take us to 494. Now let's head back to the daily chart for 1 second because I want to show you something. Daily chart here, and I was talking about the support earlier. Where is it at? 524. And where's this one at? 494. So perfectly lines up with the 236 level and the 382 level. All right, now very quickly on the monthly chart. Oh my goodness, bearish divergence. Now, this isn't on the daily chart. This isn't on the weekly chart. This is the monthly chart. This could take a long time to play out. However, mark my words, bearish divergence is going to play out and we are going to get punished. All along here, you had bearish divergence. This was forming and eventually you ate it. You ate it. Absolutely ate it. So mark my words, this bearish divergence is going to have an effect on us and it could potentially take years to play out, okay? Okay, now the wave counts here on the screen. I have a wave 1 here, wave 2 here. What does that mean? We're in a wave 3 and we're in the wave 5 of the wave 3 here. And this wave 5 is that wave count that I was telling you about on the weekly chart with the 1, 2, and that we've topped in a wave 3 potentially here and are about to correct. Now that could potentially mean that we have one more big push up that could maybe start in quarter 4 this year, and then that could be the last major push up for the next, I don't know, half a decade or a full decade even. A wave 4 would be devastating. Look at our wave 2 here. We had a large ABC correction, and yikes, this was approximately 10 years of turmoil. We could potentially see that with a wave 4 right here. All right, so quickly, we're looking at the SPX. We're looking at 3 moving averages now on the monthly chart. The 45 period, the 60 period, those are in white, and the 314 period moving average in blue. Now look at this. How did we know we were entering this wave 2 right here, this 10-year long devastating period? When we dropped the 2 white lines, held it as resistance, and what did this signal? That we eventually were going to come back down to this blue line. And where did we bottom? We bottomed on that blue line. Let's look at our last devastating period. And mind you, look at this. We held these 2 white lines, this whole rally here. Whole rally holding the white lines. But look what happened when we broke them right here. So we were holding them as resistance right here in April of 1970. Fell through it here. Look at that, we crashed, got back above, back, and where did we bottom? The blue line. Absolutely devastating. Since our last 10-year period ended in 2009, we have held on to the 45 and the 60. Right here came down to it, here came down to it, here came down to it, here. Eventually, you break it. Eventually, we are going to break it. It's not my opinion, it's a fact. You always revert back to the mean in markets. Eventually we will break this level. It could be years down the road, but what does that mean? That we could potentially come back down all the way to this blue line down here. It's going to be moving up, but that could potentially happen many years after we break the white line. We could reclaim it and then crash all the way to the blue line. It's very possible. I'm not saying this pattern has to repeat over again, but you just saw the last 2 times we had these devastating 10-year long periods. We need to watch out because this really could happen. All right, so now to close out on the SPY, what do I think is going to happen? Like I said, this week, a potential bounce. And as long as we don't take out this high right here at 565, as long as we're not trading above 565 consistently, I think we have entered a wave 4, and we could potentially see multiple weeks, potentially even a couple months of sideways to downwards price action. And it could be grueling, it could be boring, it could be complicated. There might be some fear, but fear not, because ultimately I do think we're going to break these levels. All right, so now we're talking about the Qs. Now, I have personally entered a long position on the Qs because we are on support. Simply, we're on support here, trading at 475. And where do I think we're heading to? Possibly to fill in this gap right here to 490, 493-ish. And then I don't think we're going to get above here. We have a reversal engulfing on the daily chart that is king right now. And as long as we're closing below 503 on the Qs, we are bearish. So I'm bearish on the Qs. I think we're going to head up, fill the gap at 490, like said, come back to this level. And if we do that next week or in a week after that, then this level is not going to be as strong, and it's likely we're going to break it. Sideways action, essentially. Sideways to downwards action is what I'm seeing here. But eventually, I do think we're going to see a bottoming on the Qs, probably closer to 450. Now, when do I think we could see 450 on the Qs? We're at 475 right now. That's not far away, you might say. But honestly, I think this correction is going to be multiple weeks, potentially even multiple months. On the weekly chart, what do we see? On the weekly chart, we see a devastating candle formation. This is an evening star. Bad. Reversal. Bad, bad, bad. Okay? Not a bullish thing. How can you be bullish when you see something like that? This is absolutely a reversal signal, and it's a strong one at that. Momentum is creeping downwards here. Not confirmed downwards momentum. We want to see the purple line, the signal line below 80 to confirm that. But yikes. Our RSI has been failing to make new highs here, even though our price is going up. So the weekly chart has had a pullback that is coming. I think we're going to see multiple weeks of pullback price action. And hey, remember that daily chart support level that was right here? There could be some confluential support in this area eventually, potentially, at around 450. So now on the monthly chart of the Qs, what are we seeing? This really strong bearish divergence that we've been seeing on the SPY, that we're seeing on the weekly charts, we're seeing on the daily chart of the Qs too. Bearish divergence, that's going to catch up with us eventually. Also, we really need to watch this candle here on the Qs. This is what tells me that we're going to see multiple months of corrective price action here, okay? Watch this candle like a hawk. Right now, if it closed like this, this is a bearish hammer, a really bad, yucky reversal candle. We have 9 days to change this. 9 days to see something else, but if it closes like this or anything like this, forget it. The next few months are going to be corrective, going to be sideways, going to be downwards. So you don't want to see that. But ultimately, what do I see? In the charts of the SPY and the Qs, this week, I think we're going to see a bounce, followed by a rejection at those gaps that I have highlighted on our charts, and then we'd pull back to the support lines that have shown on the daily charts that I think we would then break because we're on this support line right now. And once you come back to a level so fast, it's not as likely as it's going to hold. And then ultimately, I think that would be how we know we're in a wave 4 and potentially see multiple weeks, potentially multiple months of downwards price action. But at the end of the day, I think we will see on the SPY and the Qs one more big leg up that could potentially last another 6 months to a year before we enter a bear market corrective phase that could potentially, hey, last 10 years according to some of my long-term wave analysis. Now, that doesn't have to stand. We could break above the divergences we're seeing on the monthly charts RSI, but let's be honest with ourselves. If the next couple of months are corrective, we would head lower on these RSIs, making it harder to break the divergence that we're forming. So, in other words, we are forming a ticking time bomb that's not going to go off overnight, but rather in the coming years. So what I'm talking about here is a 10-year long period of devastation that is not going to start this year, most likely, maybe is going to start next year, but people are not going to realize it until multiple years down the road. And it's going to catch a lot of people off guard, but that's why you watch my videos, because you want to stay ahead. Alright, thank you for watching this very grim video, but you need to see it so you can make the best decisions for your financial future. Alright, have a good one.
잘고 뒤나 비상가 내 밑에야 빌라 눈물라 좀 길라린다 헤이머드 노 bombo 카 킬말라 people time 좀 반나 first class